Network. I'm Michael Yorba, your host. Thanks for joining us. My segment guest to this segment is Nick Santiago, President and CEO of InTheMoneyStocks. Nick, thanks for coming back on the show. How have you been?
Very good, Michael. Hope you had a good holiday there.
I did. All I did was just relax, mess with the horses, and take it easy.
Excellent, excellent.
Okay. Last time you were on here, we got really surprised the next following day with a big rally in the stock market.
Well, it wasn't really all that much of a surprise. I was actually, as you know, looking for a low around the end of the month. I was short, actually, and was stopped out of my trade, but nonetheless stopped out with a profit. And now we'll just play the waiting game, and we'll wait for the next market turn. Right now we'll give the market that slight upside bias this week because of the holiday. But overall, nothing's really changed. Even today's action is dreadful. You could see the financial stocks today can't get out of their own way. And you had an ECB rate cut. China cut rates. And, you have this so-called bailout going on in Europe. Just shows you how weak the market really is, even on a day like today where there's no volume, that the financials just can't even muster a gain. J.P. Morgan in particular, down 4% today.
Well, do you think, and you're really the one that put us onto the J.P. Morgan leading indicator. Do you see that we're going to have a turn at this point on the S&P market?
Oh, yeah. This is just, we were due to get a little cyclical bounce because we were down for, 3 months or so. But now we'll get this bounce. Maybe it lasts till the end of the month. I don't even think it goes up that much, to be honest, even if we do bounce from here. But I'm only looking for the next turning point to sell this market across the board.
Okay. All right. So that's my question, though. I ran my preliminary numbers using yesterday as a possible top, meaning the third as a possible top, and it gives me a time target of the 17th. I wanted to figure out, because you're really good with these cycles, how does that fit with what you're looking at?
Well, I've examined it, and I've been asked this question by my members as well, and I just said, let's just stay neutral right now because I'd like to see the numbers into tomorrow's job report, and then from there, I think that we generally like to give the market a little bit of time to sort itself out. Ultimately, the market's addicted to quantitative easing, and institutions love that, but the action is just dreadful. And then you look at stocks like Nike and Ford. Just some of the worst action I've ever seen in Nike in all the years I can remember. Ford looks horrible on the charts as well. And, both are citing weaker sales overseas. And I don't even listen to that stuff. I just look at the charts. But when I see two companies like that complaining about, a strong dollar and weak sales overseas, earnings season's right around the corner. So, right when we get into the heart of earnings season, I think the downturn will come. I'm not exactly certain of the date, though.
Okay, got it. Thank you for bringing that out. All right, USO, you wanted to talk about that.
Yeah, I want to talk a little bit about USO because it seems to be having a nice bounce. Even spot crude really has had a nice bounce as of late. But I'm working on crude levels right now. I think crude is going back downtown, barring any geopolitical event out of the Middle East, obviously. But right now, this is just a counter-trend bounce. We see oil rally all the time around the 4th of July holiday, right when the summer driving season kicks into full gear. Nothing more than that. Just let this rally take its course. But when the market turns down, everything's going with it.
Okay, so I'm looking at this market, the crude oil market. Had a nice little rally, but it's below the open, and it's negative from the last trading day, the 3rd. So do you think that we may have a turn here today?
No, well, there's always a chance of that. I can't rule that out, but I'm thinking a little bit higher because we're going to have tomorrow's job report. There's going to be no volume after the first hour of trading. I don't think we could really put too much on that. And then next week we'll go back into real trading as volume comes in, and barring any geopolitical events. And I think Iran is still a little bit of a wild card. We'll see oil probably make one more move up. And then I think it's going to be lights out from there. So I wouldn't get so bearish on it just yet, but after another move up, and I'm working on the level now, so I don't have the exact number in my calculations, but I do think that we're close in time as well as in price. But, maybe you look at a little higher from here, but it won't be that much higher.
Okay, well, you've already, obviously got your eyes set on the lower prices. Do you have anything in mind, a general range that you think it may head to?
Well, I think it could trade as high as 93.
But the other way, the south
Oh,
side.
to the downside?
Yeah.
Oh, when the selling comes in, this oil could be at $65.
Whoa. Would you be buying it there, or do you think that's just the tip of the iceberg?
I will be a buyer of oil and everything later this year when I think the inflation rally is really going to hold true. Right now, this is nothing more than an election stunt by all the central bankers out there. Even China, believe it or not, they're going to bring in some new politicians to take over. So this is really just a political stunt across the board, and I'm not going to put much into this recent rally, but I think everything's going lower in 2012.
Got it. All right. Well, since you brought up inflation, deflation, what about GLD?
GLD is going lower too. If you take a look at the GLD today, it's down $1.75 on the back of a stronger dollar. Ultimately, I think the dollar is going to 85 in the near term, and then ultimately $90. The pattern on the dollar, the bullish pattern, has not been broken. The dollar goes higher, the markets go lower. It's pretty much that inverse at the moment, inverse lockstep relationship, really. And today, gold can't get any traction. Gold has another leg down as far as I'm concerned. That'll be its final leg, and that'll be in the fall season. And then you could own gold again. Okay,
that being said, do you have a price in mind for picking it up?
Well, we've talked about it a little bit from time to time. Price. Actually, time is more important to me than price. But ultimately, I could see, gold could drop anywhere from the GLD. I would say from anywhere from 147 to 140, and maybe even 135. The lower, the better, as far as I'm concerned, because we'll get it at a cheaper level.
Got it. Okay, well, that would give us a pretty good price to buy gold, and anybody that's looking to do that, okay, they'll be smart about it. All right, now XOM is the next topic.
Yeah, I wanted to talk about ExxonMobil. It's something I haven't brought up on your program before, but to me, before J.P. Morgan came into the scene, this was my market barometer. And ExxonMobil is the world's second largest company behind Apple Computer by market cap. It's obviously the world's largest energy company. But one thing I noticed about ExxonMobil is that despite its recent move, and it really has made a sharp move higher from June 25th, when it was trading down around $80, $81, now it's all the way up at 85.5. But this stock looks like it has a lot of resistance above it from here. This should be watched by everybody because the oil markets really are a big component of the S&P 500, roughly, I think, 17% ExxonMobil is really the only stock you have to follow in that whole entire sector. But you have a lot of resistance here. So this is telling me this rally should be short-lived, whether it's a few weeks from now or not. But keep an eye on ExxonMobil. When this thing turns down, that's going to be a good indication that these energy stocks are ready to make another leg lower.
Yeah, I'm looking at it on a weekly chart, and it looks like this would be the fourth top at this level right up here.
Yeah, you do have a series of lower highs, and it's had a nice bounce, but ultimately I think this is setting up to make one more leg down, and that's going to be a good indicator that this market's ready to go. So,
do you think? Let me jump in there. Do you think it would get down to the 200-period moving average? That's what's running about 70, 71.
You're talking about the 200 on the weekly chart?
Yeah.
I think there's a real possibility of that. In fact, let me just look at my other screen here, and I'll tell you exactly what I have penciled in for it, and that'll help us all. Yeah, I have it. First we'll go to 75. There's going to be a big level at 75. And then the 200, I have my 200 set around 73 and change. And then I think you could get down to that 72 level. So it's very, very possible.
Okay. All right. JJC was the next thing you want to talk about today.
Yeah, this is copper, JJC. Obviously today it's back down 74 cents because of the stronger dollar. But I don't see any real upside potential in JJC. It has a wall of resistance at 46. I know, you know as well as I've been all over this shorting copper bit for so long, and nothing has changed. So gets up to 46, if it even could get there. I'm not even sure it does that. But, it would be nothing wrong taking a stab at the short side on this thing.
again, it's turned over just like the rest of them we've spoken about today. Do you think that you've got can you give us an idea of a target for the low?
Oh, I'm looking at this thing going down to 35, ultimately, by the fall.
Okay, that's a pretty good move. So this is a longer-term trade.
Yeah. This is, this thing is just a gift that keeps on giving. Every bounce can be sold. Time and time again. If you go back all the months that I've been on your show, I said any significant bounce in this thing, sell it. And, throughout 2012, and all it's done is make a series of lower tops. And even in, the month of May, that was one of the signals for me that this thing, right on May 1st, I said, oh, my goodness, look, this thing's about to roll over. And sure enough, it went from, 49 all the way down to 42. And it really is just a gift that keeps on giving. Well,
just to set the record straight, ladies and gentlemen, this is the man that called the top on our show in August. I think you were within 1/100th of a penny of calling the exact number on this trade when you've been shorting this thing since August.
Yeah, there are various ways of playing this too, Michael. You could buy the BOM, which is a 2-time double short base metals. That thing has just been astounding. Believe it or not, my listeners or my subscribers will tell you, I picked out the dead bottom in that on January 26th at 10.50, and this thing went all the way up to 15.50, almost $16 just last week, and it's going to be a buy again. Almost any day now.
Now, before you go, I've had several people calling in and sending me emails also looking for a good trade room to learn how to trade better. Give us a way for our audience to get into your trading room.
Come on over to InTheMoneyStocks.com. Take a 7-day free trial over to our intraday stock chat. You'll see our trading desk, and you'll see our screens, everything we do. We also talk about our swing trade cycles and everything else in there. It's a great forum, a lot of educated members in there, and I don't really think there's really anything better that anybody could do but to come over and take a trial.
Yeah, watch this guy thread the needle, buddy. This guy's very, very good.
Thank you, Michael.
Thank you, Nick. All right, everybody, that was Nick Santiago, President and CEO of In the Money Stocks. InTheMoneyStocks.com.